Good morning and welcome back to the first session of this very important Banking and Finance Summit organized by KSI. And of course, the Master of Ceremonies has already named the candidates who are going to be presenting to you in this panel session. By way of an introduction, I'll say a few words. First of all, I would like to congratulate all of you for being brave and coming forward to organize and participate in this summit. Of course, out there you have got some kind of a fear and scare or scary side of a situation, but apart from that, life must go on. I think Tan Sri Michael in his opening remarks did mention about the balance you want to have between life and livelihood. I think that is the essence of these challenges. And I would like to say that challenges is something very philosophical. We might even use the word, we should use the word problems. I think we are facing the problems. I think we cannot run away from the fact that the COVID-19 has brought us into a very, very difficult and unknown terrain, and we are not sure. It may not be even an unknown terrain, unknown sea. We do not know how to chart ourselves. But human dignity and human enterprising techniques tells us that any one of the problems that come across, we will be able to encounter and face, and we will overcome. So the land will come in sight soon, and hopefully we will move. So what I will do now is to briefly introduce the background. But before I go to my left or your right, I would like to comment on the dresses of these two pretty ladies that are here. They come purposely in striking red. Congratulations for that, to add color to this particular panel session. Thank you very much. And Charon Wardini, I think, is very well known. He is a distinguished scholar from Oxford. And of course, he has background in the law firm of Zaid. And then he went on to look at CIMB, and his background is very distinguished. Now from there, he has sort of moved on to Ghazana Research, and then he has now come to MIDF. And he is coming from a developmental financial institution. I think that is very important to distinguish the sort of contributions that we are going to get on this panel session. And next to him is Mr. Ong Eng Bin, CEO of OCBC. And of course, this is a very traditional, although foreign bank incorporated in Malaysia, but they have a very, I'm saying it with a good sense, that a conservative approach to banking, and they have survived for a very long time, everlasting. And therefore he is coming from that kind of a banking background. And the third speaker, or the panelist, is actually Mr. Shankar Kanabiran, who is EY Ernst Young Advisory Services with background in technology. I think that is the most important thing. We will see how traditionalism and technology is interacting in the banking industry, and maybe technology would be able to take a leap forward in order to bring banking to the consumer and to the users in a very, very difficult way, now accelerated to some extent by the COVID. And of course, the next one on my left and on your right is Elaine Lokman, is it? Or Lockman? I would like to use Lockman. And Elaine is the co-founder and director of Atta Plus. She would be also looking and sharing this from a perspective of Shankar, because you are now moving in not the computer and internet based into various other forms, into cloud financing and various other techniques that have come in. And you'll find that nations and governments are finding it difficult to govern this particular area, and they are trying their very best to see how best you will be able to license them in some ways. And her Atta Plus is actually licensed by the SC. And of course, on to my extreme left and to your right is Ms. Wong Hooi Ching, MD and Head of Financial Institution of Standard Chartered Bank. And this morning we had their Chief Executive Officer, Mr. Abrar, was here at the early period. I think he's joining us much later. Now, Standard Chartered is probably, if I may right to say, the oldest financial institution. Predated, yes. And I remember that the Bank Negara governor opened his account in Standard Chartered, and that is the reason why I became a customer of Standard Chartered Bank. So you will be looking at it from a very old, established financial institution and how they are coping with the challenges or the problems that we are facing. And therefore, we have got a diversified kind of a panel. And the manner in which we are going to do is, I'll take the order. This is pre-arranged by themselves, not my dictation. So Charon, you will take the floor and say whatever that you want to comment on this global technological and economic challenges. What will shape the future of banking? And I just like to make a remark. We are not out of the COVID yet. This is not a post-COVID kind of a situation. We are right in the midst of COVID, and what will happen during COVID and probably after that. With that, Charon?
Thank you. Thank you very much, Dato Mohamed Iqbal, fellow panelists, ladies and gentlemen, Tan Sri Michael, Tan Sri Majid. It's a huge honor to be here and to talk about this. I'd like to talk first of all about, where we are in this new normal. And I like numbers, and I like Bursa numbers the best. So at the beginning of the year, Bursa index was 1,602. As of yesterday, Bursa was 1,586. So if you look at Bursa, nothing has changed really. 1,600 to 1,586, nothing has changed. But everything has changed, of course. We're all wearing masks and social distance. So the new normal looks like the old normal, but it's radically different. So let's look at the constituents of the index to give us some idea. Now in January, the index was Maybank, $98 billion company, Public Bank, Tenaga, Petronas Chemical, CIMB, Maxis, Axiata, IHH, Sime Darby Plantation, Hong Leong. As of yesterday, it was Maybank at the top. Market cap's down to 88. Public Bank, and then Top Glove. Dato Noripa, of course, is independent director of Top Glove, so congratulations, Dato Noripa. Top Glove is 67 billion ringgit company. Tenaga, Harta Lega, is now a 61.7 billion ringgit company. Petronas Chemical, IHH, Maxis, and then CIMB, and then Sime Darby Plantation. This sounds unimaginable. This is a new normal, where the most important companies in Malaysia are glove manufacturers. Not banks. Certainly, banks are important, but nowhere in the same way they used to be important. Oil and gas is not that important. IHH is smaller. Telecom companies are almost dropped off. So this is a new normal. Now, if you total up the market cap of all the five big banks, and then you take out Maybank at the top, so that leaves you 4, and you compare it to the 4 rubber companies, which are Top Glove, Harta Lega, Kosan, and Supermax. They're worth more. They're worth more. In fact, Harta Lega and Top Glove are worth more than all the other banks except for Maybank and Public Bank. The smallest of the top 5 banks is a third of the size of Top Glove, a third. So this is the new normal we live in. And for us to debate here about the relevance of banking, the train has already left the station. The relevant companies in the new normal are those who embrace the new normal and adapt to the new normal. And if you think about it, so a company like Top Glove is serving the entire population. All 7 billion people in the planet are potential customers of Top Glove. The potential customers of a Malaysian bank are 30 million people. So that is the new normal we live in. And I don't think we've actually grappled with this change, total change in paradigm. And that what we took for granted before is just not the same. I mean, wearing masks, for example, we just have to wear a mask, and it would be unthinkable before that you could talk to a minister while still having a mask on. But that's the way it works today, and that's a new normal. So I'd like to discuss some of that. And I'll just make one more point before I let someone else talk about things. Is this idea? The biggest threat, short-term threat to the banks, and in fact the whole economy, is this COVID recession. And I think we've been pussyfooting about what we're calling it, saying it's a slowdown, it's a temporary setback, it's a V-shaped recovery. No, it's going to be a recession this year. Recession means negative growth. And for sure Malaysia is going to have negative growth, for sure. The only question is how big that negative growth is going to be. Is it going to be shrinkage of 0.2% or 3 or 4%, which some economists have done. At the moment, unemployment stands at about 800,000 people. 800,000 people, which is around 5%. And that 800,000 people doesn't include the unregistered foreign workers, because our definition of unemployment is people, members of the workforce who are not in employment over the total workforce. But we don't include, there must be about 2 or 3 million unregistered foreign workers who are not in the official statistics. So if we include those, we easily have over 1 million people unemployed. And as for those who are unemployed, the definition of employment which Malaysia's Department of Statistics uses, which is what the world uses, it's not just me making it up, it's what the global definition is 1 hour of work per week. 1 hour of work per week. So a guy driving a Grab who manages to do a couple of Grab rides counts as being employed. So if you take out those guys, true unemployment in Malaysia is huge. And we've never seen that kind of unemployment. Back in the mid-80s, when there was a crash in commodity prices, unemployment hit those kind of numbers. But commodity prices recovered, we turned around, we became an exporting nation, and we did something to recover from that. But that's not going to be the same. Oil prices are low, palm oil prices thankfully have recovered. With the trade war going on, we have no idea where electronics will go, manufacturing will go. We could do very well out of it, or we could do very badly out of it. And tourism is gone. I'll come back, I'm sure, but it's not going to come back tomorrow. So these are the big things we have to think. So I'll leave it with that first, Dato, Iqbal, and then perhaps we can discuss this some more. Thank you.
Thank you, Charon. I think that is the opening remarks from Charon. I think he has given sort of an overall picture, and what comes out from that remarks is that first, if you talk about the economy, and if the Bursa is an indicator of the status of the economy, then you'll find that the banks are not dominating that particular area, and somebody else is coming into that picture. And who has come in? The customer base has shifted. You are talking about banking is a very restricted, even within ASEAN, you still have only 600 million kind of a population, and none of the Malaysian banks are into the ASEAN as wide as possible. But when you talk about some of these glove companies, glove-making companies, the customer base is the global population. I think that is the customer base on which they are focusing, and therefore the trend is now shifting from there. Now, from a perspective of what Charon has said, let us see what Mr. Wong has got to say from a traditional banking point of view, and where the traditions are actually getting knocked down, not locked down, knocked down in some ways. And he has a presentation to provide, and I'll invite you to go over to do the presentation.
I think I maybe won't look at the presentation because it might distract all of you. And I was told I'm the only one with a slide presentation, so typical traditional bank. But I would like to just first start to answer Dato Sri Iqbal's comment about OCBC. The conservatism was in his words. And that's come with a reason. Because OCBC was born during the Great Depression. I don't think any of you are born that time. It came around 1932, shortly after the Great Depression in 1929. And OCBC actually was 3 banks who suffered, and they found that it's better to band together and join forces because we will be stronger during this time. So that has been in our DNA for the longest time. And that, if you look at it, has helped us through many crises. Certainly, I've been in OCBC for 32 years. I've seen at least 5, 6 crises. We all survived. OCBC, even during the Asian financial crisis, we did not suffer a loss at all. And it's also due to so-called the fact that we have been very conservative. Because we believe that one of the most important things is to survive, to be able to help our customers. You have to survive first. You must not get into trouble. Now, the next question that Dato Charon has mentioned, which I'm very happy to, because many of the top glove companies are actually our customers. So I'm very happy that they're doing well. The thing about this is that banks, the way investors have looked at companies to invest, they now look at a different way of approach. They look at banks, the traditional banks, as being very, very complicated businesses. Too many people, too many rules, regulations, and they like simple businesses that at one touch they can deliver to the customers and all that. So to a certain extent, this is happening. But the reality is that banks are still very relevant. In fact, I think 2 years ago, in a different venue, but also something on a banking summit, there was somebody who remarked that I'd rather go to the dentist than to the bank, and that we need banking, but we don't need banks. And we are now at a pandemic, a crisis, and we are recovering. What I wanted to also share is that definitely there are some learnings here. Are the banks going to be around? I believe so. And it does emphasize the need for traditional banks. Because assuming that Bank Negara was fast, very fast, and issued digital bank licenses 2 years ago, I'm not sure whether, will they survive? Because it's new. The reality is that many of our customers need a physical help. How do you actually find out? We're now talking about post-moratorium. How do you know your customers are still alive? If you don't have people going to visit them, to kick the tires, look at the premises, whether it's still open or closed, the factories. So people are so important. I'm very traditional from banking. I like to have automation. I like to have staff that continues to grow. Because if I wouldn't be proud if I tell investors that, oh yes, I grew my revenues, I have less and less staff. Because staff is something that is very important to the whole global health. Imagine if you have more and more automation, but you have less and less people in the workforce. We're talking about livelihoods. The businesses that are now badly affected are some of these that if they go into full automation, you're going to find that they need less and less people. And if less and less people are being employed, how are they going to spend the money in the hotels, in the F&B outlets? These are something. So we have to be very cognizant of some of these aspects. Now, one thing that learning from this crisis, the last 3 to 4 months, banks have actually responded very positively. I think amongst industry, we are probably the one that uses the most technology. And we are able to swing from working from office to home very fast. I give you one example. OCBC, our head office is quite near to Masjid India. And we were operating there, and around 4 o'clock, some police people came to our building and told us that by the end of tonight, midnight, 12 o'clock, you all have to vacate the building. If not, you have to stay in the building for 3 weeks. 4 o'clock, okay? 4 o'clock. We had to mobilize everybody out of that building. We had almost about 800 people in the building. So fortunately, we also occupied the building across the road, Wisma Ali Rubber, and we quickly set an application. Fortunately, we had VPNs, we have laptops, so we could really allow our staff to work from home, work at the branches and all that. So the ability to do such things and respond so fast is only possible that we have the technology. And most of the companies, if you realize, those who can survive are those who have embraced technology. For instance, if you're a restaurant, if you have technology to serve your customer and deliver products during the lockdown, you can still survive. But those who are very traditional, one of my favorite Chinese restaurants, they just closed for 3 months because they don't have these capabilities. So I think technology is important. Banks are very important, and bankers are even more important. I would like to, for the sake of my comrades in the industry, I think you're right. We only have 30,000 customers, but the impact of banks to change livelihoods, to help our customers to get through these difficult times is even more important. So as you know, the industry have come out to say that we're not going to do an auto moratorium because that would not really help, because we do not know exactly what each and every one of our customers need. So we're going to do a so-called targeted R&R or moratorium. This requires us to understand very intimately what's wrong with your customers. And this is not something you can do digitally, but it is something that you can use digital to actually help your customers. For instance, we have the online channel, we have the call center, we have the branch, we have the RMs. So these four multiple channels are the way we're going to help. I think we'll create a lot of impact, and the importance is not just focus on profits, but focus on how we can impact our customers. Thank you.
Dato Sri,
Yes,
if I may actually follow on from Dato Ong's comments, right, as a fellow banker. So I run the financial institutions group in Standard Chartered, and part of my coverage actually involves looking at fintech, or what we call internally as a new payment method industry. I'm actually an optimist at heart, right? I look at COVID as an exogenous event, something that happens in a lifetime. A lot of the challenges the banking industry has been facing the past few years, they were actually already there. And perhaps it's just accelerated because we were faced by the pandemic. So I just want to tell a little story in terms of what, as a global bank, what we see as today's realities, right? I mean, definitely we are in some ways being disintermediated by the global tech giants, right? Amazon, Google, Apple, all of them offer payments ability on their platform. And then closer to home, right? Via Grab, via Gojek, you are actually able to access financial services through the wallet, right? But however, if you look at it, I still believe that there is a role for what we call as traditional banks. Because if you look across the industry, challenger banks such as Monzo, N26, Revolut in the UK, it sounds, there's a lot of hype, a lot of VC money has gone into that, but none of them have actually reached a level of profitability, and you can see that losses are mounting. And then thirdly, when you look into a lot of this peer-to-peer lending, internet-based lending, right? We have talked a lot about changes in credit risk parameters, right? But is it really proven? And then if you look at the fraud that are mounting in the P2P space in China, P2P lending has actually been stopped by PBOC since November of last year. And then finally, regulators across the world, definitely in the ASEAN region, they are very mindful of introducing new systemic risk into the system, right? So for example, Monetary Authority of Singapore have issued a digital banking framework where they've made it a requirement for digital banks to actually serve the underserved. And then if you look across at open banking in the UK, they've only managed to sign up 1 million customers after 2 years of lackadaisical development. So, and then if you look at what I see as some of the areas that traditional banks such as ourselves have a role to play, it's really in terms of partnering with a lot of the new technology companies, right? We will always have a role there. If you look at human behavior, right, with COVID, that has actually pushed for a flight to quality, right? You can actually see that sign-ups for digital banking in the UK has actually dropped and bank deposits has actually climbed up. And there was a study done of challenger banks in the UK where even though the client sign-ups have actually increased fourfold, I believe in the UK now there are 20 million clients of such banks. However, in terms of profitability, it is only 1/30th of, and when you look at average revenue per account, it's only at 1/30th percentage of a traditional bank. So as a banker myself, I feel that what is really important is to be able to embrace and adapt ourselves to the technology that's coming. Thank you.
Thank you, Hui Ching. I'm glad that you, I won't say intervene, because the logical flow which I mentioned at the outset comes into play, and therefore you brought in a very valuable point of view. I think what Mr. Wong said in terms of conservatism and then the embracing with innovation, if in the early years, if it was survival based on conservatism, that principle may no longer hold water, because if you don't embrace a certain degree of innovation and technology, then you may become a little bit obsolete. I think this is the essence of the point that Hui Ching you mentioned about it. Very good contribution. You still keep your other reserve part for your time, when it comes to. So we move on to Shankar and later to Elaine. I think you have heard from the perspective of the bankers or financial institution background, and then this technology, to what extent this technology is going to disrupt banking and probably enable banking into a better customer service. We do not know. I'm sure the participants are also wishing to learn more from you. Shankar?
Thank you, Datuk Seri. Dato Ong, I also had slides. Any consultants must have slides. We can't go around without slides. But I also decided that maybe perhaps, living there and having a conversation. I think, Hui Ching, just to your point, you are right. Absolutely. In UK alone, there's 53 digital banks and it's growing. You know what? And most of them, they're not spending their own money. They're spending some investors' VCs' money. So of all the 53 banks, only one bank is making profit today. That's Oak, which is specializing in SME. The rest are not. And globally, there's 100 over banks. And as you go by day, the number is growing, 100, 120 plus. And out of that, there's only about 6 that is profitable in the last 5 years. So that tells you that there's a lot of money that's going on, there's a lot of hype that's going on, but I think the traditional bank, the incumbent banks, rather than traditional bank, I would call it incumbent bank, has a role to play because of the value that they bring to that. And part of it is also touching to Dato Ong's comment about technology, right? I mean, if you look at a bank, at the heart is actually technology. It's a technology company that's providing a banking services. That's what you look at, and precisely to the point where the ability to turn to COVID. But like any other consultant, we will have framework to explain everything, and be it COVID, be it whatever. I just wanted to share this from how we look at that. The trends, the impact to the business, the disruption is nothing new. If you look at Industrial Revolution, what changed the world? What changed the way we work? It was our machinery, right? The availability of steam machines and everything that changed the world. So today there's no difference. So when we look at mega trends that's going to impact, be it banking or any industry, there's 4 major primary forces that we say that will impact. One is technology, clearly Industrial Revolution, you call it the 4th Industrial Revolution and so on. That will come and continue to come in years to come. I mean, technology advances as we go forward, right? The second is demographics. You got young population, aging population, depending on countries. You got urbanization, moving from rural to urban areas. Those have impact as well. Then we have globalization, or rather deglobalization and tarification going on and so on. That is also another impact. And the other one is environmental impact as well. COVID. Last 3 months, everybody is speaking COVID. We have gone multiple conference webinar on COVID as well. But there's a lot of things about global warming and everything. Those are the environmental impact that will determine the mega trends in the next 5 to 10 years. And that mega trends are what that will continue to disrupt the banking industry, be it in the way we work, in the way we serve the customers, or the way that we're going to use technology to kind of serve the customer. So for me, this is something that we have accepted it. It's just that it becomes more amplified in the recent times where we're talking about, is technology going to displace bank? I don't think so. These are all the elements, the primary forces that will force businesses to adapt to the changes, to the drivers, to perform better and so on. So it's not about, the bank is, technology is going to displace banking or any other industry for say, but the difference is the industry that is able to adapt to the changes, to look at the trends that's coming and adapt. Those are the industries that's going to survive, whereas the industries that's not changing. So we ran a survey during the COVID-19 period, and what we found was that the SMEs were the biggest part of the population where, it's not that they did not know. It's just that the kind of help, the kind of, I guess, assistance available to them was lacking, in a sense that they did not have that kind of resources big corporates have to invest into technology. Hence, they were kind of grappling with that. And what we found was that a lot of simple help about bringing them online and bringing them access to customers via using technology clearly brought them, and it's not that they're not aware of that, it's just that the move towards that adaptation and embracing technology was slightly slower in the SME industry as well. So I think that's what I would like to leave, in the sense that, technology is not something new, it will continue to come. There are other forces that will come into space, and these forces will continue to interact and disrupt the industry, and be it banking or non-banking industries. We just need to understand what are the forces and determine, how do we react and change our organization to that. Thank you.
Thank you, Shankar. I think the perspective from the technology and the innovation side, I think it's rapidly progressing and probably prompted more by the COVID-19 scenario. And whether the COVID go away and this is going to be to some extent slowed down or halted, the answer is definitely no. I think the trend is going to continue. But this trend also is bringing forward a sort of a threat, because when you talk about the digital frontier and then digital banking and so on, whether customers are ready and the sort of a traditional banking services that is talked about, corporate to consumer to retail and various modes of banking services, it's not sure yet. So the threat and the opportunity will try to knock one another at some point in time, and we will have to strike a balance. And this is where the governments with the governing and the governance structure will have to come in. This digital banking or the digital frontier without a governance system has got a lot of threats to the whole structure of the banking and financial system. And maybe we will get another perspective of the technology frontier and how this has been made possible with ACTA Plus or similar type of organizations. And Elaine?
Yeah, thank you, Dato Sri. So I'm going to talk about the perspective of alternative finance and what is available and why alternative finance is now becoming much more attractive, especially to SMEs. But if you look at what's available in the market right now and the evolution of new products that's coming out, even the larger corporates are even looking at this alternative finance infrastructure. So I am in the crowdfunding space, and we are regulated by the Securities Commission of Malaysia, and I think we are very fortunate that our regulator in Malaysia is very far-sighted and actually is the first, we are the first country in ASEAN or in Asia to actually regulate crowdfunding, equity crowdfunding. And just to give a little bit of context and what is crowdfunding. So it's actually accessing funds from the public, so that they can support businesses or even ideas. And there's 4 types of crowdfunding. There's donation. So that's typically for charitable causes. And there's typically no returns because it's, it's if you support specific causes, you contribute, right, without expecting anything in return. And there's reward crowdfunding, and reward crowdfunding, the most popular I would say are the Kickstarter platforms or Indiegogos. Some of you may have heard of them, very popular in the US and globally. Typically, reward crowdfunding concepts are whereby the crowd contributes in exchange for, in return of a product or a service, right? And how this evolved into equity crowdfunding is because there were quite a number of people who contributed in these products that eventually became like multi-billion-dollar companies, and they were thinking, oh, what if I had become one of the earlier investors and held shares in these businesses? And then I would have gained a lot of upside when they went listing, actually. And debt is very straightforward, basically providing lending. The crowd themselves provide, they become money lenders, through a specific infrastructure. So in most jurisdictions, equity crowdfunding and debt crowdfunding or P2P crowdfunding are regulated, mainly because there is an exchange of shares or cash in return. So it has to be regulated. And in Malaysia, there's 2 different sets of operators that operate equity and P2P crowdfunding. So just to give you a little bit of statistics, so equity crowdfunding was regulated from 2016, middle of 2015, June 2015, and debt crowdfunding end of 2016. To date, for equity crowdfunding, we've supported close to 90 companies, and we've raised about 90 million ringgit to support these businesses, mainly for growth and expansion. For debt crowdfunding, in total, we've supported more than 2,000 businesses, and I think raised close to 740 million ringgit. Obviously, for debt crowdfunding, the uptake is much more higher and faster, mainly because for the investor or for the lender, they know exactly the kind of return that they're getting, what they're going to get their principal back and what kind of interest they're getting. But for equity, it's a bit different because the risk is higher, and typically the investor wouldn't have a clear idea when the money's coming back. It depends on the structure of the investment. If it's ordinary shares, so the issuer can give an idea like, okay, I may look into an IPO in 5 years or a trade sale or acquisition. So that's a bit more uncertain. But if it's structured in terms of a preference share structure, then it's a bit clearer, of the end goal. And how much can you raise? So you can raise now up to 10 million ringgit per business, per company, when you want to fundraise through a crowdfunding platform. So let me come back to the subject matter here that we're talking today. So I think specific to to us, so we look at this as an alternative finance and providing another channel of access to finance, and that's why SC was regulated this, because they see that as a gap. And they see that SMEs were getting more challenged when they go to traditional financial institutions to look for funds, yeah? And the turnaround time doesn't help either. So I think with platforms such as ours, we look at different kind of screening parameters, as well as using technology to minimize the time. So I'll give you an example. Like for us, when we screen a company, our turnaround time of screening a business, making sure, subject to them giving a full documentation, yeah, is 5 working days. Okay, that's how fast it is. So most of the time, the ones that delay the submission are the companies on their side, and then in terms of when they can fundraise, it also depends on them. How fast can they come back with content, right? It can be anywhere from 1 month, 2 weeks, or even 2 months, depending on them, right? So you can see, I think, process and looking at different kind of parameters, especially when you go to SMIs, yeah? So I think this is an innovation where banks can look at, yeah, traditional banking system and how fast, right? And mobile technologies, especially use of mobile technologies, because I think in general, people are very, very comfortable using the mobile phone right now to operate, do business, do their work. I can tell you honestly, if I leave my handphone at home, my smartphone, I will have to turn back. If I lose my phone, I'm dead, okay? Because everything is there, right? And we work using that, right? So, but having said that, you look at digital banking infrastructure, and I agree with Ching, when you talk about how successful are these digital banks, right? And my personal opinion, when I look at digital banks or even players that are like ours, when we come to this kind of environment, compliance is very important, So what I find with digital banks is that they're good at looking at, what kind of technologies, and we can provide the service, we can cut the process time, but they don't have very strong compliance. And for Ada Plus, we're very fortunate because one of our co-founders comes from a compliance background. So we're very, very particular about compliance, and we have a responsibility to the investors, right, in terms of governance, trustworthiness, transparency, so very particular about that. So I think that's one of the key factors. But however, looking at technologies that's available right now, like blockchain, you can actually embed some of these parameters or requirements into the blockchain infrastructure. And this is something that I think a lot of, I think banks are starting to look at it, to how to embrace that and incorporate that in the process and procedures. But at the same time, how can banks look at this alternative financial ecosystem that is token-based? And this is where we talk about the crypto environment. Like for us, how we have embraced it is that for our investment, we can accept both fiat currency as well as crypto. So for example, if a company says, yes, I want to be able to accept investments in both, I would say currencies. I don't like to use the word currencies because denominators, yeah, because Bank Negara is very like, okay. Any Bank Negara people here? Okay. So yeah, but this is the reality of it. There is a part of this new financial ecosystem that coexists with the fiat environment, yeah? So we are looking at working with partners, who can actually facilitate that better, yeah? And for us in Malaysia, what we would like to work, or who we'd like to work with, is a partner who can provide what we call a digital trustee infrastructure. Because how we operate, when we raise the monies through crowdfunding, the funds are actually parked in a trustee account, right? So it's an independent account. It's not in my account. It's not in the issuer's account. It's in a trustee account. So, however, we have yet to have a similar infrastructure in the crypto environment whereby there is a staging platform whereby it holds. Because in Malaysia, it's an all or nothing model whereby when you fundraise, if you don't meet your fundraising target, the monies are all returned back to the investors, right? So that's how we manage fundraising, and also we protect also the investors' interests. So I think coming back to, again, how this can impact the traditional FIs or traditional financial ecosystem players is that I think it's not only about procuring the right technologies, but also looking at business process re-engineering of how can you serve your customers better, whether it's the retail consumers or even business consumers. So I think I would like to end with that. Yeah.
Thank you, Elaine. That's another technology perspective, and particularly on the digital banking side, whether it's coming as an alternative financing system or as a competition to traditional banking, not sure yet, but I think we'll be making our progress along the line when it develops. Ching, anything to add on at this moment?
Yeah, just the fact that I actually feel very optimistic again that we are talking about banking and technology in the same breath, right? I mean, going back to Elaine's comments, Shankar, Dato Ong, right? If you think about it, so Bank Negara issued the eKYC guidelines recently, right? And then with that, it actually demonstrates to you that our regulators are actually working hand in hand with us to enable the accelerations for some of the digital model that banks will need to roll out, accelerated also because of the pandemic. And then again, coming back to the usage of crypto as well, I'm actually keeping a close watch in the space of the central bank digital currency. I think the Chinese government has already, I think, in the middle of testing the digital yuan. So I think that's very promising. Japan and the UK central banks are also starting the pilot phase testing. So again, I feel that this is actually one of the key emerging trends for banking in the near future.
Thank you, Ching. I think we have completed the first round of presentations or remarks from the panelists. And now is a time for us to open this to the audience. And I see that bubbling hands are up already. 1, 2. All right, we will give a preference to the lady. You can go to the microphone. And then please identify yourself by saying what is your name and also the institution where you come from, so that whether the question is loaded or not loaded, we will be able to know.
Thank you very much, Dr. Sri. My name is Nuripa Kamso. I was the former chairman of Bank Rakyat. Banking everywhere, but not at a bank. That is the Bank 4.0 by Brad King. And here we are seeing that it's no more fintech, but it's techfin. It's technology entering into finance. So in your experience, know that we bankers are caught with the legacy system. So in your experience, is it easier, advisable, effective, more economical for us to totally demolish the old core banking system? Or should we actually realign, redesign, which can get quite a challenge? I just need some comments on that. Thank you.
That's a very strong sort of a question, abrupt disruption, and then we move forward to something. I think the bankers with a conservative mind and the bankers with a long tradition would be able to make a comment, and maybe Charon, you would have something to say about this as well.
Thank you. Thank you, Datuk Nuripa. Datuk Nuripa and I worked together for some time in a different institution. We've got two sponsors here, right? We've got Silver Lake, who makes core banking systems and charges that does very well in providing core banking. And we've got Green Packet, who are actually a fintech and probably will be a digital bank. So that's gives a nice spin on who's going to be the long-term winner. The Silver Lake business is tied to the traditional banking business. The Green Packet business is not. I think CC Puan he's gone back, but I'd like to congratulate him. So talking about digital KYC, Green Packet one of the first to come up with digital KYC. So the forefront is in the digital tech. One thing the new normal has done is that it's accelerated digital adoption in an incomprehensible way. Everybody's gone digital. I mean, before this, the thought of ordering food or brass or anything online was silly, and now you order everything online. We just accepted the fact that the phone is an extension of ourselves, and everything's done it. So what we thought would take 10 years has already happened in the last 3 months. So we have to embrace the digital, and I'm glad that Chartered Bank is sanguine about the future of big banks. But I'm not so sure. The biggest bank, one of the biggest banks in the world is JP Morgan, market capitalization about $300 billion US. Bank of America about $200 billion US. $200 billion is more than the whole of Malaysian stock exchange put together, because that's we're only about 1 trillion ringgit. So one bank, not even the number one bank. Ant Financial, which is the fintech arm of Alibaba, the guys who do Alipay, they're about to do an IPO, and a conservative valuation is $200 billion US. And this is a fintech, right? This is not some small guy in a garage trying to do something. This is Alibaba. They're huge. If Alibaba were to turn up to Malaysia and say, "I'll buy the number 10 bank in Malaysia," okay, it'll be pocket change for them. It's pocket change. And that's the kind of stuff we're facing here. I salute Green Packet, and I hope they find a niche. But we have on the one hand the giant, and the other thing is the barriers to entry have really come down. It used to be the case that to become a bank, you have to go to a Silver Lake type organization and spend hundreds of millions, if not 1 billion ringgit, on a core banking system. I can tell you now, if you were to go to China and ask them for a banking system, you could get one for about $5 million US. A bank in a box. And so the whole thing, everything has changed, and I think it's changed in an incredible way. So MIDF is a very small bank. We do development finance, and like Dato Ong, we have lots of small SMEs, and we're very proud of helping the SMEs. And again, I agree with Dato Ong that we need bodies out there talking to the customers, making sure they're okay. But we don't need the rest of it. We need the bodies out there talking to customers. We don't need the rest of what a bank today has, huge back offices, branches, and all that. We don't need all that. So I think for a small bank like us, for the first time, we actually can compete with a giant bank, because in the end, the bank these days is not the branch you see. The bank is this. So whoever has the prettiest app can be just as good as a bank with a 500-year history. So I think it's fantastic. I think it's great, because, and I'm glad I don't work in a big bank anymore, but it's a new world, Iqbal. It's a new world, and I think the new normal is many things, and that includes the fact that whatever we take for granted today, the banks we take for granted today will not be the same banks. And I'm trying to urge all our regulators to be as protectionist as possible and not to allow the big giant tech companies to come to Malaysia, because they'll just demolish us.
Okay.
Steamroll all of us.
All right. Elaine said that she'll be dead if without a mobile phone. So now we have to say that in the new normal, if you say you exist because you have a mobile phone. Dato Ong?
Okay. As conservative as we are, we are the pioneer. I think if Mr. Gore was here, he would say that OCBC was the pioneer with Silver Lake. We were the guinea pig for Silver Lake. We embraced technology. That was shortly after I joined the bank in the mid-80s. But to address the question of Dato Noripa, clearly the banks have become very complicated because we serve everything. And what the threat the fintechs or the tech fins have is that they are very focused on a certain part of the business of a bank. They don't try to serve every customer. And that's the danger that we face. If individual tech fins start looking at wealth management SME lending, microfinancing, and they just stay focused on that, and they develop an infrastructure to support that only and try not to do everything, they will be very successful. And that's the threat of a bank to the banks. Reality is banks are trying, but clearly the legacy system to support all our customers is not helping us. So that's why we are learning, but at the same time, the agility that we want to introduce to our people and our systems is how to be agile, at the same time be robust. Because we have a good regulator who wants to make sure that we have the ability to address issues of cybersecurity, like what Ching mentioned, that many, and also Elaine, is that many of these companies, they have brilliant ideas how to do it faster, easier for the customer, but they have not really addressed some of the issues of security. And of course, besides climate change issues, one of the biggest challenges that the regulators in the world is talking to banks is about cybersecurity. And all our systems are really built around that. Even us sending out emails is difficult because we have that need to make sure that we control the information flow and all that. So I think that is one of the things that banks have spent the last couple of years trying to remain agile, at the same time making sure that our systems are robust while we are staying agile.
Thank you. Any other comment, Ching or anybody on this matter?
I think I may not be able to speak very much, Dato, in terms of replacing your core operating systems, but I think increasingly, Standard Chartered, and I think perhaps many of our competitors are also looking at alternative technology. So for engaging with our clients. So for example, the usage of API. And I know that in the past, many banks are also very reluctant to go into crowd-based services, but that is actually something that you could consider from a cost perspective.
Yeah, okay. I think if it, I think Suleiman, just hang on a second. I think Silver Lake, you want to respond to Silver Lake? I think I had somebody up there with a hand. I want to give preference to that gentleman.
Hello. Good morning. My name is Dr. Oliver Ho. I'm an ex-banker from Standard Chartered Bank, and now I run a lifelong learning academy and consultancy. Now,
Luckily not digital.
We're going digital with e-learning platform. Dr. Iqbal, I agree with you, and I agree with Mr. Shankar that the disruption in technology is coming very fast for banking. But I'd like to emphasize something from a real case which I helped a Bhumiputra Hang Putra company to borrow money from a traditional bank, financial institution, with due respect, Dr. Ong is here, and suffer 6 months. He has a collateral, this is where the rubber hit the road case, a collateral of 1.5 million. We started before Chinese New Year. The bank say, okay, we put on the documentation and things like that, and probably can land up 1.2 million. And then comes COVID, and this SME, run by chartered accountants and registered engineers who are all Bhumiputra successful professionals, heard the news that we have to delay the loan because of COVID. And after COVID, the loan quantum went down from 1.2 to now 700,000. Now, despite whatever they say, I wish I can see a PM, all the traditional banks are not very friendly to SME companies. And I hope traditional banks wake up because they have to reinvent themselves. As a consultant to my friend, who was an ex-Ernst & Young director before, Mr. Shankar, I can tell you in private his name, you know who is he I'm talking about. We went to a peer-to-peer company and we could get the fund within less than 1 month. But the interest rate was too high because the source of fund from digital banking or fintech banking, people have to borrow from the money market, borrow from investor, borrow from crowdfunding source, was about 15%, versus the bank was about 5%. So the margin was different, was too long, we waited. But what I'm stating a case here where the rubber hit the road. Please, bankers, wake up to what our Prime Minister says in the new normal. Help the SME be more flexible. Don't be over compliance. This is a risk-free case. Unencumbered property, you still don't have land for business when they're in trouble of cash flow. What's happening to all the banks? All talk. but no action. Please walk the talk. Reinvent yourself, realign to the new economy.
Please
For all
talk to
the
my
traditional
colleague
bankers.
Encik Azizi. Encik Azizi looks after SME lending for MIDF. He will. You talk to
Okay,
him.
I don't want to turn this into a controversial argument, but I think your point with the relation to how the banks deal with their customers is a relevant point, but this may not be the platform in which to address that. I think I will recommend it to Tan Sri Michael to see another platform could be developed in order to address that. Elaine, you have got something to say?
Yeah, I just want to comment on that. I think I just want to share some experiences with the SRF fund, right? Because that was the immediate response from the government to COVID. I must say that ourselves, we are SMEs. So, and we were hit in the sense that we were expecting some funds from VC funds into our company, and they were already about to invest. And then when COVID hit, the LPs pulled back, and that happened with most VCs or even PEs, right? The LPs pulled back, so we were screwed in that sense, right? So we said, okay, let's try the SRF fund, right? And we've never borrowed monies before, I think in terms of turnaround time, was not too bad. We were quite pleasantly surprised. However, again, I go back to the parameters, right? The credit risk parameters were still the same. It's as if COVID never happened. It's the same lending parameters. So that's one. So number two is, whilst I think the banks processing, I think they move fast, the banks approve, but then it got stuck at CGC, got stuck at BNM, because CGC and BNM still needs to approve the financing, the loans, right? So I think until today, I'm not sure whether there's any funds that's been disbursed at all, or even approved, So, so it is whole value chain. So I think it's not that fair, I guess, to the banks themselves. But yeah, I think coming back to what Doctor said, and also I think some of my comments, I think in terms of the processing parameters and the response time could be perhaps better, can be improved.
Improvements to
There's a lot of room for
service,
improvements, and I think banks they do acknowledge, they do understand, and I think they are taking steps in defense to the banks, right? Yeah, taking steps to do that, yeah.
Right now, I think the banks themselves are into a problem area with the moratorium and the sort of a new financial reporting services and provisions for impairment and the other things. So that is the other side of the problem. Sulaiman, you have a point or a question?
Assalamualaikum. Very good morning. Datuk Seri, by the way, my name is Othman, not Sulaiman.
Okay. Thank you for the correction.
Okay. Actually, what I would like to do is I would like to make a few comments because Silver Lake name being mentioned a few times. Also in response to Datuk Noripa's question, and Datuk Charon mentioned about, Silver Lake being the core banking solution provider, and I think Datuk Wong also mentioned something. First of all, I would like to clarify that yes, although Silver Lake has been known for a very long time as a provider of a traditional core banking solution, a very proven, and a majority of banks in Malaysia are actually using Silver Lake. But over the years, knowing the requirement of the market industry, Silver Lake has also evolved and developed. So what we are doing today is we are providing options to our customers. Yeah. So because Datuk Noripa asked question about whether should the bank totally replace the banking system rather than work on improving their legacy. I would like to take on the response from Dato' Ong. Actually, bank is very complicated. Yeah, what you have today in the bank is very complicated, and the typical digital banking solution provider out there tend to oversimplify to look at banking as a very simplistic manner in terms of onboarding, payment, transactions. But actually, in actual fact, at the back, when you talk about loan, for example, right? When you talk about loan, the moment you have disbursed the loan, there's this loan management process until maturity, wait until the loan become delinquent, then you have all this process of delinquent management, then you have reschedule, restructuring, and then in terms of the interest computation, there's a lot of variations. In terms of payment, there's a lot of variation, not as simple, as simplified as this digital solution provider out there see it. We know it very much, we know it at heart because we have been doing it for 30 years. For many banks, not just in Malaysia, but also overseas, right? So what we do though, because there are smaller customers who like to look at it a very simplified way, we have options for them. So in Civilink today, we continue to have our proven core banking. For customers who would like to use this, we have that, but we also have another option for banks who would like to have end-to-end digital core. We have that option as well. So, but one last comment I would like to make is that when you talk about digital banking, it is not just about technology. It's also about the processes within the bank. So if you want to convert yourself from your bank today to a digital bank in the future, your process, have it been digital or not? You are not just digitalizing of your existing process. You have to revamp, you have to redesign your entire process accordingly. Then you have a better success of becoming digital bank. But if you look at your technology provider and asking them, I want to convert myself to digital banking, just asking for the technology to be digital, it is definitely not there. You're not there. You have to think digitally. Your board will have to have a digital mindset. Your entire management will have to have digital mindset. Your entire employees will have digital mindset. Then only you will be able to operate a bank as a digital bank. Otherwise, you will still ask your provider, your solution provider, to go and customize the solution according to your process with a little bit of digital process here and there. Okay, so that's my comment. Thank you.
Thank you, Osman. I think that is partly sponsors' time. So I think we are coming very close to the closing time of this panel session. I would just like to say one last question, if there is any, burning one. Yes, quickly, if it is a question, not a comment. Huh? Suhaimi.
Okay, let me make a simple controversial statement first before reading the question. Number one, I think banks are in a very that's why it's off. All right. Banks are pretty much in a very easy setting. And why I say that is because in a lot of cases, it has been protected by central banks. Now, particularly in the case of Malaysia and Southeast Asia and the region, they are the shield of many, or if not all, of the commercial banks. Number two, in terms of disruption, there's only one thing that will cause disruption. Because, like I said, Bank Negara is there to firewall all the central banks' issues, challenges, and competitions. Now, disruption is when commercial banks go into investment banking in a very big way. And that happens when they do proprietary banking, they do all kinds of investment, very risky investments. And time again, it's proven, particularly in America, even in UK type banks, they lost huge amount of money and they lost trust, right? Lehman Brothers, Northern Rock are all examples of investment banking. So as long as you guys stay in a big way there as commercial bankers, you're all right. Now, let me get to my question. I look at the title of this morning's topic, Global, Technological, and Economic. I'll take the easy one first, economic. Now, as far as economic, for commercial banks, there's not much of challenge. You guys can always be bailed out by central banks. So if you fumble in a big way, huge NPL, there is Bank Negara to come and say, all right, we provide you extra funding. Number two, related, central bank is the bank of last resort. So what is there for central commercial banks? That's why Bank Negara has having a firm hand on you guys because of this kind of functions, right? Now, so economically wise challenges, practically nothing. It's just between the banks who get a big share of the loan business, and that's it. And the trust from your consumers, your clients, right? Now, global and technological are in a way related. If you talk about going global or going regional, yes, you have to be very, very competent. You must have competent people, systems, and everything else. So, but this ties back with technology, because as long as you have got good technology, like Standard Chartered, like HSBC, like Citibank, I think you can go anywhere in any country in this part of the world or part of the world to compete, right? So now, as far as technologies, there's one thing that's very important, other than fintech, other than digital banking, is AI and data analytics. Now, why I would say Facebook, Alibaba are strong is because they use data analytics and AI, all right? This is where they will get ahead of the commercial banks here. But again, I think as far as commercial banks here are concerned, Bank Negara are providing you a lot of, firewall competition from outside. Thank you.
All right, thank you. Thank you. I think that brings us to the close of this panel session. I think it's well presented. May I congratulate all the panelists. At the same time, I think very fruitful discussions have come about, although some of them comments for takeaway to the government and to the central bank. But out of this, from the topic itself, we can see from the minister's statement, the economy before the COVID was in a reasonable shape, although doesn't talk good about the previous year's best that could be repeated. We were already into a sort of a downtown syndrome, and then the COVID came in. And the stimulus packages that have been brought by the government, and he did mention about the recovery that is now going to be formulated very soon before the budget. I think this is the positive statement that is coming to see how best we can tackle this economic side. The banking and finance, I think from the panel discussion, is very clear that the digital frontiers are moving in very, very aggressively. Whether it is in the form of Silver Lake-like organizations, facilitating the banks, or challenging the bank's traditional business in an alternative financing scheme. I think these are the challenges that we are going to see. I think it is also a wake-up call to the banks. If you don't change, you will be disappearing from this survival syndrome is coming in some ways. With that, I think the future looks a little bit bleak with the COVID still in presence, but hopefully with good prayer and good SOP following, we will be protected from this and then move on. Please support KSI for your future summits and conferences and seminars. With that, thank you very much for giving me the opportunity to moderate this.
Thank you very much, Datuk.